Good morning. Welcome back to the War Room. I am Malik. Today is Monday, March 30th. This is our first broadcast of the week, and we are starting it standing directly on the edge of a macroeconomic abyss. If you tracked the tape with us last week, you survived the most calculated, brutal distribution cycle of the year. The market makers artificially pumped the KSE-100 to 158,000, triggered massive retail FOMO, and then pulled the rug. After Thursday's catastrophic 5,400-point collapse, the algorithms went right back to work on Friday, executing a systematic, controlled bleed. The index shed another 1,200 points to close the week at exactly 151,707. Look closely at that number. We are currently sitting just 1,700 points above the ultimate psychological trapdoor, the 150,000 level. Retail traders are praying that this floor holds, but hope is not an investment strategy. Today, we are elevating the analysis. We are going to conduct a full macroeconomic autopsy. We will dissect exactly why the market is bleeding, how the global shockwaves are mutating local balance sheets, and what the structural probabilities are for the immediate future. Furthermore, we will analyze today's PSX roster, which features a terrifying macro trifecta, 3 mystery meetings from the absolute titans of the banking, energy, and auto sectors. To understand where the tape is going, you must understand the exact mechanics of what is destroying it. The catalyst is not local, it is global. Operation Epic Fury has militarized the Gulf, effectively choking off the Strait of Hormuz. 20% of the world's daily oil consumption is currently paralyzed. This caused Brent crude to violently surge past $112 a barrel. Here is how that physically destroys the Pakistani equity market. Pakistan is a net energy importer. When global oil spikes, our national import bill explodes, putting immediate crushing pressure on the rupee. In previous decades, the government might have stepped in to subsidize the cost of fuel at the pump to protect the consumer. They cannot do that today. Under the strict mandates of our IMF standby arrangement, the Ministry of Finance is legally prohibited from introducing unfunded energy subsidies. The result? The entire weight of that $112 barrel was passed directly to the public via back-to-back petrol and diesel hikes, totaling over 55 rupees. This triggers a catastrophic chain reaction called demand destruction. When transport costs double, the consumer stops buying anything that isn't absolutely essential for survival. Industrial manufacturers, the companies that make up the KSE-100, are suddenly faced with exploding production costs and a consumer base that has no money. This is not a temporary dip. This is structural margin compression. Corporate earnings for Q2 and Q3 are going to be completely vaporized. That is why the institutions dumped 435 million shares on Friday. They are repricing the entire index for a recession. The boardrooms are not blind to this reality. They are in a state of absolute emergency. Today, Monday, March 30th, the PSX calendar is flashing a macro trifecta. We have 3 massive matters other than financials meetings hitting the tape. This is the beating heart of the Pakistani economy restructuring in real time. Mark your screens. 10 a.m. Atlas Honda Limited. Meeting in Karachi for non-financial matters. The auto sector represents the consumer. With $112 crude oil obliterating purchasing power, Atlas Honda is bleeding. A mystery meeting from the premier two-wheeler manufacturer signals a severe supply chain or production pivot. They are preparing for a massive drop in sales volume. 11 a.m. Habib Bank Limited, HBL. Meeting in Islamabad for non-financial matters. Let me be perfectly clear. HBL is the apex predator of the Commercial Banking Board. When corporate margins are crushed, companies default on their loans. Non-performing loans, NPLs, are about to skyrocket across the banking sector. HBL's mystery meeting signals they are actively stress-testing their balance sheet against an impending wave of corporate debt defaults. 11:30 a.m. Pakistan State Oil Company Limited, PSX. Meeting in Karachi for non-financial matters. This is sovereign risk. PSX is forced to buy $112 global oil, but because of grid inefficiencies, they cannot collect the cash fast enough. Their circular debt is expanding violently. Their survival strategy today will dictate the momentum for the entire national energy chain. What does the future hold? Let us look at the mathematical probabilities. We are at 151,707. There are 2 scenarios for this week. Scenario A, the dead cat bounce, 30% probability. The index tests the 150,000 floor. Algorithmic buyers step in purely to cover short positions, and we see a low volume bounce back toward 153,000. Do not be fooled. The upside is hard capped by institutional sellers waiting to offload more inventory. Any green momentum is entirely hollow. Scenario B, the cascading liquidation, 70% probability.
The macro pressure is too heavy. The index cracks below 150,000. If this happens, technical support vanishes. Every retail trader heavily margined by their broker will receive a margin call. Their brokers will forcefully liquidate their portfolios at market price, creating a self-feeding downward spiral. If 150K snaps, we enter a free fall where fundamental valuations temporarily cease to matter. Here is your battle plan for Monday. 1. Respect the 150K trapdoor. The algorithms will aggressively test the 150K floor today. If it breaks, a massive wave of forced liquidations will hit the take. Do not step in front of the train. 2. The trifecta whiplash. Between 10 a.m. and 11:30 a.m., the index will experience severe algorithmic whiplash as Atlas Honda, HBL, and PSX all step into the boardroom. Do not trade the chop. The spreads will be violent and unpredictable. 3. Total cash supremacy. We survived the 150K rug pull because we stayed disciplined. Keep your armor on. Let the titans restructure. Let the macro storm play out. Protect your capital. Command the Monday. Disclaimer: StockSense is an educational platform. I am an analyst, not a financial advisor. The market is facing unprecedented geopolitical volatility. Trade at your own risk.